as we reveal the top 5 stocks for the rest of 2025. Joining me today is Lon Jurisic, VP of News at Investing.com. Lon, good morning, buddy.
Hello, hey Jesse, how's everything going over there?
All right. Thanks for asking. And in addition, we got Tom Montero, Head of Financial Content at Investing.com. We've got an exciting session of Tom. Yeah, of course. We've got an exciting session for you guys today. We'll be going over briefly on some of the top 10 picks that we revealed back in January. Now is a good time to revisit. Are we still bullish? Are we still bearish? What's the outlook for the rest of the year? So we'll touch base with you guys shortly. Now, before that, obviously, it's been a crazy year. From a market crash back in April, we were talking about a bear market low to record-breaking highs in recent sessions, with the S&P breaking above record high levels. So I think it's safe to say that 2025 has delivered one of the most opportunity-rich markets we've seen in recent years. Inflation expectations and tariff uncertainty, of course, still lingering in the background. But we've got Fed rate cut bets that are now shifting. The AI trade is still going strong. And the earnings season overall really hasn't been that bad. So, Lon, what's your take on what we've seen so far this year? Hectic year, of course.
Yeah, definitely a wild ride. With Trump and the tariffs, people, didn't know how to play those. Markets were pricing in the worst, and then, things, cooled out once we seen. Looks like we're going to probably settle around a 15% tariff rate, and the market seems okay with that. And I'm surprised how fast we rebounded. But at the beginning of the year, I said 10% this year versus 20% the last 2 years. I think we're at 10% now. That's a nice return. Do I think we have more upside? Yeah, I think, but again, you have to be selective. You have to pick the right stocks. Using the AI tools, only going to help you. Like I said, it's a trader's market right now. But yeah, very excited to see the market look through the tariff headwinds and rally. So.
Yeah, I mean, every day, it's like, what will President Trump tweet about today? What was, on his table, on his plate? Are we talking about tariffs? Deals coming? Tom, how are you handling all this volatility?
Yeah. So I think, just to begin with, I'll give some hard data just to say, just to convey my in a nutshell kind of view of things. I think, first of all, you got to look at things. Corporate profitability is at an all-time high. Money supply at an all-time high. Stocks at all-time highs. Bitcoin at all-time highs. Gold at all-time highs. The national debt at an all-time high. Home prices at an all-time high. And yet the Fed is cutting twice this year as the market is pricing in. So what could go wrong? Well, not much for the markets, but it could go wrong for one missing asset in all the assets that I talked about, which is the US dollar. So I think this is the decisive factor here. I mean, we've seen, corporate profitability coming in nicely this earnings season again, companies beating expectations, even Apple, which we thought, was kind of a laggard in the AI play, delivering sort of what can only be described as a masterclass in supply chain management. But honestly, the main reason for all those beats, or at least for a good part of those beats, is just that, FX, it's much more favorable right now. Companies are getting much better returns in US dollar terms. And that could be problematic for earnings growth if the dollar starts recovering. We're not seeing that now, but I would, look into that to kind of assess where we're going, where the market is going, because we need to also take into account that, a good part of those gains that we got from the S&P 500, they come in return of the dollar devaluation, right? And, looking in real terms, those gains might not be so good. So that would be my comment about the macro. So let's watch the dollar and see where it goes, because I think this is the decisive factor of the equation. And I think it's the part that we're not talking about enough.
Yeah, I mean, it's going to be interesting to see, there's recent pressure now from Bessent and Trump that maybe the Fed should cut rates by 50 basis points in September. If they do go ahead and pull off a 50 basis point rate cut, probably expect to see the dollar go much lower, which could even be, one of the agendas of the Trump administration, a weaker dollar, which would then, of course, help trade, help exports, and earnings, of course.
Exactly.
So, I want to go back and just go over some of our picks that we presented back in January. Now, of course, not all picks are in positive territory, but overall, the first set of picks returned an average of 13%, with I think a few of those picks even scoring gains of over 20%. So, taking a look. Monolithic Power Systems was the number one pick that we offered back in January, and it's up 36% year to date. Ron, what's your take? Are you bullish? Are you bearish? Will the rally continue in Monolithic until the rest of the year? What do you think?
Yeah, I mean, they just had their Q2 earnings earlier this month, and they were blowout, beat and raise, and that's was nice to see. They're a major power chip player, and their enterprise they were up 20 to 30%, which is beautiful to see. This is those AI accelerators, and that's what's benefiting the company right now. So even though they're having issues with NVIDIA, every other player out there, the AI accelerators are rocking, and this company benefits. People are moving to what they call vertical power, and this is what the company plays into. So I think the stock can still go. I do like it, and I've liked it before, and I like it still. I do agree with the AI here.
Can you guys hear me?
I think Jesse might have frozen. You there? No.
So yeah, I mean, I just looks like there's a gap to fill over there, and that the trend here is going higher.
Heard you now. Yeah, definitely. Oh, he dropped out of the call. Okay. So I guess I can take it from here. I mean, I would comment on that. So as he comes back, he's probably going to rejoin. But anyway, I feel like I agree with Lon on this. I think Monolithic, it's a great company. I mean, earnings were just terrific. I mean, we're talking about over 30% year over year revenue surge, which is amazing. Obviously, it's getting its best share from the AI revolution. However, if we look at PEs are looking a little extended right now. If you look at last 12-month PE, we're talking about over 60. Forward PE, it's a little better, but still the company has some issues in terms of margins, because obviously to do all the catching up and it needs to do to remain on top, it's spending massive amounts of cash. So this is the one thing that worries me is take a look at those margins. If it's able to sustain that type of margin growth, I mean, it's going to be a good pick. But if it doesn't, then it's we're going to be in trouble. So that would be my one comment. I think it's grown enough, but it might be trouble if things start moving south, right? So I would be, I would take a look at that. I wouldn't put all my money into that after this year's run. So that would be my comment.
Okay. Yeah, I got that, but yeah, like I said, I do like it. It's a unique play. They're unique, unlike other chip makers. So I like their angle. I like their AI focus. And again, I think possibility that they get back into NVIDIA, and that could change the stock completely. So if they get that massive Blackwell win, again, you add 20% to the stock easy. So
yeah,
that's my take.
For sure. So I guess let's move on to the next name. I mean, we were talking about Monolithic, and we got KLA. Oh, it appears that Jesse's back. Some technical issues. It happens here and there. Is he back? Okay, maybe not. So let's maybe let's talk about KLA. I guess KLA, it's our best returning stock on the top 10 list. I mean, it delivered about 45% return since we picked it at the beginning of the year, which is amazing. It's a company, to me, this is a company that just shows it's a cash flow machine. I mean, the way it's been growing its cash flow, it's just amazing. It's not about the AI hype. It's not about being alongside with the right companies. It's just about delivering cash and using that cash well. So in order, one, to power what it needs to do in terms of R&D, in terms of production, because obviously when we're talking about companies in the segment. We know that the capex it's the number one concern from all the analysts, from everyone looking into the sector, so this is the one thing that KLA has been doing really well is the ability to manage at the same time those investments and delivering money back to the shareholders and money back to the company. So I think this is still a great play. It's a little expensive right now. I mean, obviously it's kind of difficult to see it going much higher from here. We're talking about, KLA also has, huge exposure to China, which is an issue if we're talking about 100% tariffs, obviously KLA, it's going to be exposed. Of course, again, we don't have too much clarity on how the tariffs are going to look like in terms of China. It's probably just by looking at tariffs as a whole, I would say that probably, there are going to be exemptions. So it's really hard to say, but I think, that risk aside, I feel like KLA is still a great pick right now. So what do you feel? Do you agree with that, Lon?
Yeah, I mean, again, it seems like we're just talking about AI, and what management has stated is that AI requires a higher process control intensity. So that's what these guys, specialize in, is that equipment and that detail and creating a manufacturing process that is so precise, helping big companies like TSMC produce these chips. So I just don't see that slowing down. And KLA has such a nice lock on this market. I mean, it's an example of last quarter. I mean, analysts call that what you call a Goldilocks print. It was a, beat and raise, record quarterly cash flow. Just every segment except you talk about China WFE segment's a little weak, but every other segment of the company is rocking. And again, in AI, the chips and AI, which is driving everything right now, require that more control, which KLA specializes in, and more chips, more controls, more growth for KLA, in my opinion.
Yeah, definitely. So Jesse, we were just talking about KLA. Happy to see you back.
Thank you, guys. A little technical difficulties here.
Happens to the best of us.
So KLA, one of the better performers of the year that we had. And Intel is another interesting name that we highlighted back then. Obviously, it's been in the news lately with President Trump. Are we bullish? Are we bearish? What are we looking at Intel?
Yeah, and Intel earlier this year when we did the first one earlier this year, I said it was a trade. It was a tradable stock. You get 25%, boom, you sell it. I think it's kind of the same thing. So we got that gain. Then we lost it all. The company has just missed so many opportunities. They missed wireless, leaving that up to Qualcomm. They missed AI, giving that to NVIDIA. I do like the new CEO though, and that's one thing. So when Trump threw him under the bus and said, "Hey, this guy is conflicted. He has ties to China." If they lose their CEO, who's probably the best thing this company's got going for right now, I mean, all bets are off. I just don't like it at all. But it seemed like after the meeting, so, Lip Putin went to the White House and they met, and, Trump kind of, discussed that meeting as positive. So he kissed the ring, and that's what you don't need to do with Trump. You need to kiss the ring. And I think, Tim Cook understands that. Jensen Huang understands that. So I think, Lip Putin, he doesn't have quite those connections, but I think now he understands. You got to kiss Trump's ring if you want to get the positive results. He did it. He met the White House, and it was a positive meeting. So again, that if they keep that CEO and we can get through this malaise, again, it's another tradable opportunity. Now, again, it comes down to the same thing. The company needs some kind of joint venture or M&A deal with TSMC, and I think the Trump administration is pushing for that. Now, I'm not sure what side is blocking that. There's reports that TSMC is blocking. There's reports that the Intel board is blocking that. But if they can get some kind of joint venture going, which, again, Trump will probably be pushing for that, the thing could rally again. Now, again, tradable. Do I like this as a long-term play? Not necessarily. But if they get a few wins under their belt, I think you can make a case for that. I do like the CEO, and if you see any successful company, it comes from the top down. It's the CEO, it's those upper level managers that company and bring it to the next level. Now, again, Intel's missed so many things. They had everything. They had it all, and they lost it. Can they get it back? I don't know. But I do like the CEO. And again, if things cool off with Trump, then, there's a chance that this company can recover, not just temporarily, which will happen, but long term.
Nice, interesting. So basically, now that we went over some of those picks from earlier in the year, there's a good time to reveal what the AI thinks about the stock market and individual stocks specifically for the rest of 2025. So, essentially, we asked the AI to reveal the picks, and going in order from counting down from 5 to 1, let's start off with the 5th pick for the rest of the year, and we're talking about Datadog, one of the AI stocks, software stocks here that are big part of the AI landscape. It hasn't been part of the rally. Basically, I think it's down about 9% year to date. So asking what your guys' take is on Datadog. Do you agree first with this pick, and are we bullish or bearish?
Yeah. So I'll take this one. So I guess this is interesting to talk about this list first of all, because it conveys, and before we actually go deeper into the list, it has two things, and this is the first thing I noticed because we ran the list through AI, right? Through our AI models, by the way, which if you don't know about, make sure to tune in and to take a look at the website. We'll be happy to explain it to you how it works. Over 150 investor grade models that selects these stocks, which compiles something that was look at 3 years in the past. It was only accessible to big companies or professional investors. Now it's at the hands of everyone. So I was really surprised to see the list, just by seeing what the AI is looking. And basically, it's seeing two things. It's chips or healthcare. Basically, chips for momentum, healthcare for price. But I think this is an interesting one because this is kind of a stock that combines a bit of both. I mean, if we look at, obviously, momentum is starting to build up, but still has, comparing to everything that we're seeing in the industry, still has, a nice price. And I see, on top of everything, I see that, you mentioned it as an AI play. It is, but still AI only accounts for 10% of the company's revenues. I mean, there's a huge growth avenue there if the company is able to catch up. But then, obviously will depend on, how much it's able to pour, on R&D, on development, the CapEx, which are the issues. So again, margins are, I think, the real issue here. If it's able to grow, revenue in that, about 40% base, and then we're going to start looking at, the company actually generating the type of cash that it needs to grow. So I think the issue here to me is a little bit, about the company that needs to grow a little faster than its cash can sort of provide right now. But so that's why the market has been kind of pricing it in, kind of thinking, over the last couple of months, just thinking, okay, so are they going to be able to, catch up or not? But I think, this last quarter, the last few numbers that we've seen, I think they show a different trajectory. So I'm pretty excited. And again, I agree with the AI, but with just the caveat that, we need to look into those margins. Those are a big risk for Datadog right now. It's kind of hard to catch up, and they're not generating the type of cash that we would like to see. It's a step forward, but over the next few quarters, we need to see that, those margins and that cash flow kind of start improving on that end. So because this is what's going to be key, especially looking into 2026.
Taking a look at the chart, obviously there was quite the sell-off there leading up to the tariff uncertainty in April. But from April, off the $80 low there, it did jump about 100% back up to 160. I thought it was interesting if we can ask Warren AI's take on Datadog. Warren AI essentially is your very own AI powered, research assistant that basically does all the hard work for you. So, let's ask it something on technical insights. So, if I were to buy a Datadog today, what technical levels would I be looking at for, purchasing DDOG stock? So let's ask Warren AI, and then we can take a look at how it works and how it, the magic that it spreads. Should I look out for? We're on Datadog. Now we can see this pull up in real time.
Yeah.
All right, so it's examining a little bit. Obviously, we could do. I could do this. It would probably take me about 30 to 45 minutes, and Warren AI basically does this in less than 30 seconds. So the final bottom line, Warren AI's take. If we're looking at the levels, the 127 to around 128.86 are your near-term levels of support. So we'll pull up the chart again over there. Now, for the bigger picture, investors should eye the 130 level for a recovery or breach below 127 as a risk-off signal. Now, obviously, there's a bunch of insight here. Support zones, pivot levels, RSI indicators, moving averages. So all the hard work is basically done here in less than a minute. Let's go back to the chart. So Warren did mention the 130 level. So yeah, this is a big level here for the stock. We'll see, if it does break down towards the lows of earlier in the year, or does it pivot around these levels of support and, move back up to its year-to-date high. So very interesting on Datadog. Overall, I like the stock. Was one of those COVID favorites from back in the day. If you take a look at I actually IPO'd right before COVID broke out, and was trading up at around 210 in November 2021. So obviously the stock here still consolidating off those highs from the COVID. We'll see how it plays out for the rest of the year, but the AI is bullish. So let's reveal the fourth overall pick for the rest of the year. We've got Elevance Health. Elevance Health, one of the biggest healthcare players in the U.S. Obviously, the healthcare sector, has been struggling, that to say the least in 2025. Whether it's United Health or Eli Lilly, Novo Nordisk. So obviously, the healthcare sector is struggling, but the AI chose Elevance Health for as one of the candidates for the rest of the year. What's your take on this, Tom? Are we bullish or bearish?
Yeah. So this is another case where what's happening with the stock, the news, and everything that's going around kind of clashes with the actual fundamentals of the stock. I mean, looking straight at the fundamentals, this is a complete no-brainer. I mean, we're looking at a company with over $40 billion in revenue, with a PE of about 16, which is much lower than of the S&P 500. Performance is lower than of the S&P 500. So it's basically that classic case of a good company with bad headlines. And I think the headlines have been bad for the sector as a whole. But so I think right here the question is how long are you looking to own the stock? Because either way, regardless of what happens on the headline front, I mean, the stock will recover eventually because it will need to reverse it. I mean, could that take a year? Yeah, we don't know exactly. So if you're looking, for a stock that will reward you with, maybe 10, 15% over the next 6 months or so, I don't think this might be the name, just because of the amount of headwinds that it has in terms of, excuse me, just with the Trump administration and what's going on in terms of companies trying to restrict several of the avenues that these companies had to profit. I mean, you're seeing that take a toll in many of the companies, and you've seen public reaction against, all the entire healthcare system kind of, also putting a damper on these names. But still, eventually, this is still, gonna reverse to the mean. This remains an impressive stock. I mean, it's a great company, and I do see it recovering. But the question is the when, right? So if the when is now, I'm not bullish. If the when is in 2 years, if you have enough time for that, I'm definitely bullish. This is a great name to own.
Yeah, I think basically every name in the healthcare sector right now is presenting some pretty good value, bang for your buck, essentially. But the recovery will probably take a bit longer than in what an investor is looking for. Essentially, I personally would disagree with this pick, even though the AI. I thought that this was interesting. I pulled up. The Investing Pro sheet for Elevance Health, and the fair value actually shows 51% upside. So that was something very insightful in regards to the price action. But again, I think that this would probably take a bit longer in terms of the recovery. And like right now, you probably have better options for you to make the money work for you. So Elevance Health, the AI likes it. Fair value points to significant upside. So we'll see how that plays out.
If I may, I think, there aren't many opportunities in the market showing this kind of upside. So this kind of, return for your dollar. And I think this is why the AI is looking into it. I mean, obviously the market is overvalued. And, if you're a long-term investor and if you want to find bargains, that's where you got to go. You got to go to healthcare right now. You can't be looking into AI. You can't be looking into any sectors just because of the way the year has been. So, and this is what really makes a difference between, the list that we looked at the beginning of the year and the list that we're looking at now. I mean, the market has moved immensely, and that's why we actually need new picks, right, for the rest of the year, just because of everything that's happened.
Yeah. I mean, that pretty much, as the market shifts and the environment changes, the character changes, as an investor, you better adapt to those shifting conditions. And that's why you don't want to, marry your position, as they say, and always got to be nimble and, adapt to to whatever is going on in the market. So without further ado, let's reveal the third overall pick for the rest of 2025, and it is Microchip Technology. Microchip Technology, I think it is. It's up about 11 or 12% year to date. So essentially, it is underperforming the S&P 500, still in positive territory. Ron, what's your take on this name for the rest of the year?
Yeah, here we are, back to another chip name. They just reported solid Q2 results. Net sales were up 11%. But yeah, it's been a roller coaster stock. It's just not getting a lot of traction. You have a massive sharp downturn in the revenue. So 58% peak to trough revenue decline. So that just kind of tells you where we're at. But here's the good thing: the company's executing what they call a 9-point recovery plan. And last quarter, there's signs that this recovery plan is actually working and actually going better than expected. Bulls think that the company can hit these 65% long-term margin targets, which would be great. But bears, point to, the valuation compared to peers, and the stock just becomes more of a show me story. And the last quarter they did. They showed you that they can, recover. They can, execute on this recovery plan. So I like that. Do I love this stock? No, I don't love it, but you've seen there's a slight rotation into analog chip names, and you've seen it the last couple of days, which is kind of strange. These analog, these Texas Instruments, NXPI, these are analog chips. They're not the NVIDIAs of the world, but there's some rotation into them. So the valuations are catching up. So you see, maybe the market's going to put a little higher multiple on some of these stocks, and that just ultimately lifts all boats and could help this stock. But again, it's not my favorite name, but I do understand why the AI picked it, and I do like that they're proceeding on that recovery and hitting their goals with their recovery plans.
Nice. So yeah, I think we could ask Warren AI's take on this one as well. Just provide a quick technical analysis on microchip stock, and we'll see what the AI says about this.
Yeah, and I think the cool thing that we need to mention here is that, Warren AI can provide both technical and fundamental analysis, and it can look, into everything that Investing Pro offers. So this is super helpful because it also helps you, understand whether you want to buy the stock, and when you do decide to buy the stock or sell the stock, if you will, it'll give you the levels, the ideas in order to do that, more safely, with better, idea of where the market is looking. So this is just great because it complements both sides of the equation. So we're not just talking about technicals, also fundamentals, and it's kind of doing what we're doing here, right? So we're talking about the fundamentals, and it looks at the technicals. But Warren and I can do all that for you. Maybe we'll be replaced in a couple of years by Warren AI as a whole, but we'll see about that.
Yeah. I mean, obviously, Warren AI does pretty much anything you ask. Over 25,000 metrics, 50 years of historical data. So there's a lot of information to pull out. Essentially saves you hours. And when you add it up over the long term, nice little summary here at the end. Where basically you get Warren AI's take in a quick paragraph there. Essentially, there is a big caution right now, according to Warren AI, on microchip. There are some sector headwinds. And unless a turnaround in earnings or a material positive catalyst emerges, things are looking a bit iffy for microchip. Now, again, there's a lot of information for you to deep dive in here, both technical and fundamental. So again, pulling up the chart, you do see here that there's a bit of a tug of war between the Bulls and the Bears. A couple of key levels here to look out. So again, Microchip is another interesting name to look out for for the stock market for the rest of 2025. So yeah, I think we're getting close here. The last two stocks that that are just about to be revealed. Skyworks Solution, very interesting name. Tom, what do you think about this one?
Yeah,
I think it is. It's been rallying so far this year.
Yeah, so this was actually another pandemic play that kind of lost steam over the last couple of years, and now it's finally picking up speed again, like in the whole AI revolution thing. I like it. I love the name. I used to like it back then. I think it's a well managed company. It's a solid company. It's a company that cares about does things that are really important, and especially in the semi world. So but there's one caveat about this is that it's too high over reliant on a single company, which is Apple, right? So if we're seeing demand growth from Apple, we're going to see Skyworks probably responding well. But then again, if we see any risks on that side, and then Skyworks might be a problem. I mean, we're talking about over 60% of Skyworks revenue comes from Apple, which is just simply outsized, right? And what are they doing to breach that dependency? Well, to be honest, not a lot. I mean, it's you got they are increasing R&D spending. They are trying to put some of the cash to work, but honestly they're still too tied to Apple. But here's the good part. I think Apple is one of the probably within the Mac 7, it's probably the most underpriced company right now. Obviously, if we talk about Tesla, it's another game. It's not the stock that it's the worst performing of the 7 this year, but then it's not right now in terms of fundamentals is not a good bet, right? But Apple, on the other hand, has just been mispriced. I mean, it's the last earnings just showed that Apple has been completely mispriced because people think that consumers just want to buy whatever is cutting edge in terms of AI. And that's not really the truth right now. I mean, we're still seeing huge demand for core products from Apple, like the same smartphones that didn't deliver all those AI innovations, and it's still delivered, and people are still having a huge demand for that, especially with the weaker dollar, right? Excuse me. meaning that, I think this is a good part of the cycle for Skyworks, even though it remains, a risky bet, for the longer term, just because of its dependency towards Apple. I mean, if things change, if the company is able to turn around that, which I think it's working, it will become a better long-term play. But for now, I think it's a good, midterm play, but probably not a good long-term play because of that. So this is my take. I think I agree with the AI if we're looking into, the last 6 months of the year. But if we're looking, for 2 years from now, I wouldn't put my money into that.
Yeah, well, you do look at Skyworks chart, and there is a bit of a correlation to the recent recovery that we've seen in Apple chart as well. I did find it interesting that the fair value, according to the quantitative models in Investing Pro, point to 17% upside. But when you look at the financial health score, it's a bit concerning. Definitely in terms of the long-term growth potential. However, looking at the chart, I think there is perhaps some room for recovery in Skyworks chart, and I agree with the AI as well on this pick. I think it's a solid name to own for the remaining months of the year, as we do see the recovery in Apple, and Skyworks probably sees some positive correlation. So without further ado, let's reveal the number one stock for the rest of 2025. So let's pull that up right here. And Centene Corporation, which is another healthcare name, one of the biggest managed healthcare companies in the U.S. I'll pull up the stock shortly, but I think it just got massively chopped down in terms of price lately. Lon, what do you think about this name? Obviously we talk about the healthcare sector. This is another one of those names. Are you bullish or bearish for the rest of the year?
I mean, again, you talk about ugly. What has happened at this company? Ugly. I mean, that's the only way you can describe it. They've got, in July 1st, they withdrew their guidance for the year, and they talked about a $2.75 hit to earnings per share. Stock's down 55% since then. So just, you understand why the AI picked it, because it's a turnaround and a valuation play. But fundamentally, the company's just been through the ringer. Now, that doesn't necessarily mean everything's bad, because now you have an opportunity to buy this stock at a super low valuation. So if you look out at the out years, so not looking at this year, but looking towards 2026, earnings could rebound 110%. And by 2027, earnings could rebound by 214%. So that means if you look at a forward PE, the stock's trading at 7 times in next year, and then the 2 years is trading at 5 times. So historically, the multiple on the stock's been about 12.5. So you could get it for 7 times next year earnings, or 5 times 2027. That's your play. But is it going to be they say don't catch falling knives. So if you do enter this stock, do it gradually. Average cost down into it. Don't just, if you plan on buying 1,000, 10,000, don't buy it all in one big slug. Space it out, because there could be some more weakness. But again, the company's trying to get things turned around, and if you look at those out year earnings, there's potential. So again, things got really bad with the health insurance marketplace. Medicare costs are rising, so they had to take this massive hit. But now things can kind of settle down. One analyst, for example, at Morgan Stanley, he's got a bull case of the stock at $41. He's got a base case of 28 and a bear case of 15. So that suggests you about 41% upside, or 41% downside and 63% upside. So do you like those odds? Again, if you space yourself into the stock, it could be a winner long term, but I wouldn't expect anything, like I said, super near term, but because the company's going through this massive transition and trying to piece things back together as far as their earnings are concerned. So
yeah, so this is the one. It will be interesting to see how this one plays out for the rest of the year. The stock is down 55% in the last 3 months, but according to the fair value models, There is 57% upside. So, we'll see if this is one of those plays that we see in the healthcare sector. That will it turn around, or will it lag behind the market for several years? I'm sure we'll revisit these picks at the end of 2025 and see if the AI was right or wrong. This is a good time to remind you all that all of today's insights came directly from the same AI models that we use in ProPix AI, which updates picks monthly and gives full rationale for each change. Very, very, I think all strategies are outperforming the broader indices by a wide margin so far this year. The stocks so far in August, one of them is up 57% so far this month. And,
by the way,
what is that?
Review the name. It's VSAT.
Oh, there we go, Tom. I didn't know if we were allowed to say that
as well. By the way, it's not the only one.
Nice. So yeah, of course, using Investing Pro and ProPix AI, you can obviously find all these hidden value gems early, get the latest insights with your AI research assistant, and use Warren AI for both deep fundamental analysis as well as a technical deep dive into any stock in the market. Now, we do have a special summer sale offer that will be ending soon, so be sure to take advantage of the 50% off offer. I think there's a QR code, very technological for a fintech company. So we got the QR code there for you. This will be up on YouTube, so of course you can always go ahead and rewatch this at any time. If you have any stock picks or recommendations that you want us to go over in future webinars, be sure to drop that in the comments section. We'd love to hear from you guys. So thank you for joining us today. And until the next webinar, may the trading gods be with you. Thank you, Ron. Thank you, Tom, for all your amazing insights and advice here for what we've got going on. So we appreciate you guys joining, and we appreciate, of course, the audience joining as well. Stay safe, and may the trading gods be with you.
And I'll be looking into Centene right now because I think the technicals look really good for a rebound. If you look at the chart you were showing, it's rebounding, stopped dropping exactly at that pivotal line. So I'm looking into it deeper after this webinar for sure.
Yeah. Perfect opportunity to go ask Warren AI for his take on the stock. So go ahead, use whatever tools that we have to offer, and may the trading guys be with you. Have a good one, everybody.